In this May 2026 Mortgage and Housing Market Update, I break down exactly what's happening with rates, home prices, and buyer demand. No jargon, just the real picture. Now, whether you're a potential home buyer, an existing homeowner watching your equity, or an investor keeping an eye on the real estate market conditions, this update will address 4 important topics of what to expect heading into this summer. Now, number 1 on the list, where are mortgage rates today and what's moving them? Number 2, latest housing market forecast for buyers and sellers. Number 3, home equity trends. And finally, number 4, investment property outlook and what the smart money is watching. So let's get started. Number 1, kicking off with mortgage rates. At the close of May, the most popular 30 fixed rate for a primary home purchase had the conventional at 6.5%, and both the government-backed FHA and VA were both at 6.1%. These rates are elevated because of essentially one thing, and that one thing is the potential for increasing inflation. This inflation concern is now being driven, for the most part, by higher oil prices and that unresolved conflict in the Middle East. It's important to mention also that the new Federal Reserve Bank chairman was just recently sworn in on May 22nd. Kevin Warsh's appointment could very well signal the near future in which the Federal Reserve assertively starts cutting interest rates. So, but in the near term, I wouldn't expect mortgage rates to drop anytime soon. So it's more that what we call sideways rate moving. Now, number 2, the housing market. Selling forecast that's going to be heading into summer shows some few interesting points. The national slowdown is continuing as specific market buying and selling conditions will dictate if sellers need to reduce those listing prices or offer buyer other types of incentives. Well, at the same time, sellers in those high demand markets will most likely be unaffected by this national slowdown. Now, keep in mind, whether you're a buyer or a seller, it's very important to employ a professional real estate agent helping you guide your decisions. Now let's go to number 3. Moving on to the home equity, look at these shocking numbers. Wow. You'll notice that home equity in the United States is about 17 trillion, with 11 trillion of that number is available for a home equity loan or a second trust. So really, it's no surprise that this market really has homeowners keeping their 4% or less mortgage rates, and they're tapping into that equity for those home improvement and other needs. Number 4, here we are finally closing out with the investment property outlook. Now, right now, investor home purchases dropped 6% year over year during the first quarter of 2026, falling to its lowest level since 2020. What's going on with that? Well, the reason for this drop is very simple. It's the current elevated home prices and mortgage rates. The numbers no longer make sense as rising costs eat into those profits. Right now, there are all these high-risk, unfavorable conditions for investors to get back into that market. Now, there's some good news in there because this trend will help out those potential home buyers out there, because those previous investor-driven demands really help drive up a lot of the home prices. So in closing, the takeaway this month is for buyers and sellers to stay optimistic and be informed on your local market conditions so you can make those wise financial decisions. And until next month, I want to thank you for watching and take care.